It's Tuesday, the 22nd of September 2020. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. Share markets tumble from Wall Street to Europe and Australia as investors fear that COVID-19 will continue long into 2021. That's our main story. Also coming up in today's podcast, infection numbers in Australia fall to 3-month lows, but borders remain closed. The federal government set to announce its favoured green technologies, and Commonwealth Bank upgrades its forecast for the local economy. Later in the podcast, I talk to Karl Simich, Chief Executive of Sandfire Resources, about the mining sector. But first, here's a brief look at markets. Financial markets are the main story today. More on Wall Street and the local bourse shortly, but first a quick look at commodity prices. Oil prices fell by close to 5% as fears that the global economy would slow hit markets. Gold, a safe haven for investors, well normally it is, was also lower. US Treasuries, which are a good proxy of fear in the market, rose. That means people want more of them because they're safe, pushing down returns for investors. And the Aussie dollar is down. It's trading at 72.1 US cents as traders pushed the greenback higher. The total number of coronavirus cases worldwide is now 31 million, with 961,000 deaths. The re-emergence of coronavirus cases around the globe has triggered a sell-off in global equities, with fears that more lockdowns will cut economic activity. Overnight, the S&P 500 on Wall Street fell by as much as 2.7%, pushing the index close to what is considered a market correction. Commodity, industrial and financial shares led the drop, and the US market, close to the end of trading, was set to record its fourth successive fall. It's the first time that's happened since February. The number of deaths in the US is now close to 200,000, and the 7-day moving average of new cases has risen for 8 straight days. There were 87,000 new cases in the US over the weekend. Hardest hit on the market were the big stocks, with the Dow Jones Industrial Average down 3%. The tech stocks, which have outperformed throughout the pandemic, were down more than 1%. European markets tumbled on opening and kept going. Airlines and travel companies and banks led the losses on the Europe Stoxx 600 index. It finished 3.7% lower. The German, French, British and Italian markets all ended sharply down. Chief Medical Officer in the United Kingdom, Chris Whitty, said the country was at a critical point, while the German Health Minister said the trend of cases in that country was worrying. France has now recorded almost 500,000 cases of COVID-19. The UK's recorded nearly 400,000 cases, Italy's at 300,000 cases, and Germany at 275,000 cases. The UK and Italy in particular have high mortality rates. Back home, the S&P ASX 200 ended yesterday down 0.7% to 5,823 points, and it's set to fall again. It's closed just 7 points off a 3-month low. The banks all fell sharply. National Australia Bank was off 1.5%, Commonwealth Bank and Westpac were both down 1.4%, and ANZ fell 1.3%. Qantas closed down 3.5%, while AMP was off nearly 3%. These pullbacks in markets aren't surprising, given how far equity markets, particularly Wall Street, had become misaligned with what was going on in the real economy. It's bad news for President Donald Trump as he faces voters in 6 weeks, and a stark reminder to everyone that the coronavirus still has a long way to run, and only a vaccine can fully end the volatility. In a moment, the rest of the news you need to know this morning. Have you listened to Fear and Greed's afternoon market report yet? From 5:30 every weekday afternoon, I take you through everything that's happened on the markets and the latest in economic news. It's short, sharp, and to the point. If you hit the subscribe or follow button, it'll be ready and waiting for you in your playlist the moment it's released. Overseas news first up. Plans are underway for Prime Minister Scott Morrison to be the first global leader to visit Japan's new PM, Yoshihide Suga. The trip could occur in early November and underlines the importance of the relationship between the two countries. And one of the greatest salesmen of the post-war era has died. Donald M. Kendall built PepsiCo into a global snack and beverage behemoth. managing to introduce soft drink to Russia in the middle of the Cold War. He took over Pepsi in 1963 at age 42, and he ran the group for more than 20 years, establishing a second major player to Coca-Cola. He was 99 years old. Locally, yesterday was a good day on the coronavirus front, at least in Australia. Victoria reported just 11 cases, New South Wales reported 4, and Queensland reported 1. There were 2 deaths. The good numbers ups the pressure on Queensland Premier Anastasia Palaszczuk and Western Australia's Mark McGowan to move quicker on reopening borders. Mr McGowan is sticking by his view that his border won't reopen until sometime next year. Ms Palaszczuk said Queensland will be open by Christmas. But New South Wales Premier Gladys Berejiklian said apart from Victoria, there was no reason for borders to be closed. Health experts agreed, with several noting that keeping borders shut only makes sense if trying to achieve eradication of the disease, which is not a realistic goal. Victorian Premier Daniel Andrews is also under pressure, given the good numbers in his state, to relax restrictions. He said it was too early to do that, but he would use a common sense approach. The next major relaxation of lockdowns is due on 26 October and would include reopening of some retail, outdoor hospitality and haircuts. Certainly business wants borders reopened. The tourism and travel, property, retail and hospitality sectors are among the hardest hit. The head of Accor Hotels yesterday estimated that 21,000 hotel rooms in Queensland could go vacant this summer. The federal government will today announce that hydrogen, batteries, green steel, carbon capture and storage, and soil carbon are the low-emission technologies it aims to develop over the next decade. The government's roadmap says it will invest $18 billion in the 5 priority technologies. It also hopes to streamline regulation to encourage up to $50 billion of private sector investment. The technology roadmap pushes nuclear power to a watching brief priority, while mature technologies including coal, gas, wind and solar aren't being prioritised, according to media reports. Retailer Harvey Norman provided an update yesterday, saying pre-tax earnings were up nearly 200% for July and August. A surge in sales of furniture, appliances, electronics and homewares meant pre-tax profit was $178 million for the 2 months. Chairman Gerry Harvey said it was an interesting human behaviour story whereby people have money but are restricted from going to restaurants and travelling overseas, so they spend it on gardening, painting and doing things for their home. Harvey Norman's share price rose almost 3% and is now trading at almost double its level back in late March. The news came as investment bank UBS released analysis that said Australians pre-COVID spent around $63 billion annually on international and domestic travel. A large chunk of that is now being diverted elsewhere, and UBS expects around 85% of those funds to be spent in the local economy. UBS's preferred picks in the retail sector are Adairs, Harvey Norman, Premier Investments, Metcash and Woolworths. It's been a rough week for the property groups. Unibail Rodamco Westfield, which owns the overseas malls of Westfield, is in the process of raising €3.5 billion as part of a rejig of its finances. Macquarie Group analysts yesterday warned the plan was highly dilutive to earnings and net tangible assets. Unibail Rodamco's share price fell close to 8%. Dex's property was downgraded by Morgan Stanley over concerns about how it will perform in a high unemployment, low occupancy environment. Its share price fell 3%. And Scentre Group, which owns the Westfield malls in Australia, was down 4%. Commonwealth Bank has upgraded its economic outlook, saying the September quarter growth rate will now be plus 2% versus a flat outcome previously forecast. Based on strong spending in Commonwealth Bank issued cards, the bank's economists have upped their forecasts, and it expects the final quarter of this calendar year to expand by 1.8%. The other 3 major banks have also forecast an end to the recession. It's always worth watching what the major bank economists do. They have access to all sorts of data, including credit and debit card information. Later today, Reserve Bank Deputy Governor Guy Debelle will provide his assessment on the national economy, and market economists are hoping for some insights into the central bank's medium-term plans for monetary policy. The fallout from the Yukon Gorge explosion that destroyed 46,000-year-old rock ledges continues. Rio Tinto has offered to rewrite mining agreements with traditional owners that underpin its operations in Western Australia. traditional owners are likely to want greater rights over the lands, which will in turn create uncertainty around what Rio can and can't do in the future. Rio's share price fell more than 1% yesterday. Star Entertainment Group has proposed 2 new towers at its current site in inner Sydney at a cost of $1 billion, as the group attempts to revitalise its precinct ahead of the opening of Crown Casino next year. It's the second time Star has provided a blueprint for the area. The first didn't pass muster with residents, and it demonstrates its commitment to Sydney. Within 2 years, that city is likely to be home to 2 very large casinos. BHP's been accused of racism and ageism for stopping Indigenous and older employees from working in its mines due to health concerns over COVID-19. The workers lost months of pay, the Construction, Forestry, Maritime, Mining and Energy Union says. BHP had a policy of requiring older workers and Indigenous workers over 50 years of age to stay at home as a COVID-19 precaution. Until July, those workers received their wages, but they have received nothing since then. A report from the Australian National Audit Office has been very critical of the federal government's ethical standards for overpaying nearly $27 million to a billionaire property owner for land earmarked for Sydney's second airport. The Audit Office said the Department of Infrastructure didn't exercise appropriate due diligence in making the purchase of the land and focused on incentivising an unwilling seller. A fair bit of bureaucratese there. But basically, the government paid a really rich bloke too much money for a parcel of land near Sydney's second airport. The latest entrant into the ASX 200 is buy now, pay later group Zip. Its CEO was speaking to Bloomberg yesterday and said he was targeting Australia's 16 million credit card account holders. He said the switch to online buying, which has accelerated over the past 6 months, helped the group gain new clients. Zip's share price has risen nearly 5-fold over the same period. And finally, V2 Food, the plant-based meat company, will begin selling its product in Woolworths supermarkets in New South Wales, Victoria, Queensland and South Australia. The company is a joint venture between CSIRO and rich lister Jack Cowan. Mr. Cowan is the owner of Hungry Jack's in Australia and a major shareholder in Domino's Pizza. V2 Food produces plant-based goods used as meat substitutes. The V2 Food patties have already been used in some Hungry Jack's outlets. Mining is a large part of Australia's economic success. We often hear about the largest companies such as BHP, Rio or Fortescue Metals. There are also many other companies in the mining industry, and we thought we would get the view from the middle. Today we're talking to Karl Simich, Chief Executive Officer of Sandfire Resources. Based in Western Australia with gold and copper operations in Australia, Botswana, Namibia and Montana, USA, Sandfire Resources listed on the ASX back in 2004 and has become a mid-tier mining and exploration company with a strong track record of safe, consistent and profitable production. Karl, welcome to Fear and Greed.
Thanks very much, Sean. Thanks for having me on the program and a delight to be here today.
And so Sandfire Resources itself, copper and gold. Copper is your main commodity, is that right?
Yes, that is correct. Sandfire is an Australian Stock Exchange 200 resources company. It is the second largest copper producer in Australia. It is the largest copper producer in Western Australia. It employs globally now some 600 people directly and indirectly, probably about 450 to 500 West Australian based and are employed either directly or indirectly at our 2 mines up north here in Western Australia, the DeGrussa copper mine and the Monty copper mine. And we do have gold as a byproduct. It's just a little bit under at the moment, but, order of magnitude, a very small company that then became, a $1 billion market capitalized company over its journey.
So now I can ask any question I want, because resources has never been my strong suit. Firstly, how the hell do you manage the cyclical nature of prices? And copper is a great example in the last little bit with weak prices, whereas it wasn't that many years ago where copper prices were through the roof. People were stripping buildings for copper. How do you manage that sort of cyclicality?
It is a challenge. There are things that you can do in a number of the commodity sectors. There are instruments where you can, if need be, hedge certain production profiles and prices. The biggest thing in the industry is being able to deliver on your products. And if you can deliver on your products, you can put in certain insurance policies to deal with that cyclical nature of the industry. And look, in every industry, whether it be the cattle industry, the wheat industry, any industry, certainly the commodity sector, oil and gas, we saw the oil price go negative temporarily there, through COVID. And so it was interesting. Look, with regard to that, the number one, I suppose, support structure for managing the cyclists is trying to have an efficient, effective, well-run operation and build a little bit of buffer into your system, whether it be cash on your balance sheet or access to, good customers that you may deal with in times when it may get difficult. The number one calling card in this industry is grade is king. So if you have a high quality grade product, you seem to be able to, generally survive through all the bleak times and the tough times.
Is the issue with Chinese in other areas? It doesn't seem to be in mining. Has that affected your business at this point?
Certainly not. I think at a very commercial enterprise level, we have not seen one instant of any delay or concerns or any adjustments in any factor whatsoever. So I think there's a very transparent, there's a very open, there's a very honest transaction. It really is commercial enterprise at its greatest, where what we try and do is find, develop and produce product at the most efficient level possible, and we sell to our customers on a true arm's length basis through much in the way of negotiation and arm's length, and essentially come to a resting point where the buyers and sellers meet essentially in a forum and go, right, I'm prepared to buy it. And so we don't overlap in any way, and then they buy us that product in that way.
Are you rethinking how you use energy? BP's come out recently and forecast the end of the era of big oil, and BHP is going to spend a lot of money on becoming cleaner. Have you rethought your environmental impact in recent times?
In terms of energy and, how one might undertake extractive industries, we, for example, at DeGrussa, we may still have the largest off-grid solar farm at any mine site in the world. It certainly was the largest off-grid solar farm when it was built about 4 or 5 years ago. And about 15% of our energy sources, and we are remote, we're off-grid. We have then risen to the challenge and looked at alternative and renewable energy sources as best we can. So we have a solar farm on that site that oscillates with the sun. It provides about 15 to 20% of our energy. And, we're a business that uses somewhere in the order of probably 30 million litres of diesel a year to run remote generators in a power plant, and we've been able to reduce that by about 20%. So that is a great, positive impact being able to do that. Clearly, having strong energy from a diesel generation is something that, it's hard to replicate as we see at the moment. But yes, we're certainly looking at alternative energy sources as best we can. We've just received permitting after 6 years of work, a permit in the US in central Montana, and that is the first new hard rock mining permit that has been issued to a company in Montana in 26 years, and the first new hard rock copper permit in 40 years. Now, we have made commitments at that mine, which will be 100% underground, to ensure that it is a 100% underground mine. It will be 100% reclaimed as a mine site, and it will be 100% guaranteed returned back to prior use, which is presently cattle grazing. So they're the commitments we are making as a business to be a modern mining company doing it right from the beginning.
Karl, thanks for talking to Fear and Greed.
It's been my pleasure. Thank you very much for having me.
That was Karl Simich, Chief Executive Officer of Sandfire Resources. There's plenty more in my extended interview with Karl Simich. I took the chance to ask him a few straightforward questions about resources. We also talked about the slightly thorny topic of community engagement in the wake of Rio Tinto's Yukon Gorge explosion. Karl is very frank and it makes for a great conversation. You can find it as bonus content in your playlist now. How about this for a review of Fear and Greed, left on Apple Podcasts by a listener calling themselves Dub W. Presumably that's W. They say, just what I needed. I always find myself late with catching up on business news, but Fear and Greed fills that gap for me. The podcast arrives just before the day starts, and now with evening catch-up and the week ahead is just like icing on the cake. The universe has answered my prayer. Well done, team. Thank you, W. That's quite a review. We're an independent podcast with no media affiliations, so we rely on people like you to spread the word. And I'm glad to hear you like the afternoon market wrap too. Certainly nice to know it's appreciated. That's it for today. It's Tuesday, the 22nd of September 2020. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.